Hi guys, it's CryptoBirb, Adrian speaking. Welcome to today's Friday webinar. Well, Bitcoin has been actually clinging to its previous sideways price action. We are seeing little to no follow through to either side, while actually equities have been improving relative to the past weeks. We're going to see and analyze what's been going on also throughout the week on the commodities markets, give it a deeper check into overall equities and traditional finance, and well, we definitely want to know what's coming next to Bitcoin. If you guys are ready, make sure you stay tuned. We are going to go there right in a second. Check. Let me know, guys, if you can hear me fine. I hope the weather is fine for where you're at right now. The beautiful weather outside in Poland, outside the window, while I'm actually, getting ready to move to Portugal, and all those things combined, regarding the Russia-Ukraine war, which has been going on, for over 100 days, if I'm not mistaken already. This has been having insanely large impact on the traditional markets, also in the cryptocurrency market. So we kind of like have to understand and face the reality that there is a lot of unprecedented situations going on, in the world. We are probably facing a recession 6 to 9 months from now. We are looking at the very unprecedented situation on the eastern side there. There's a lot of overall, resettlings and then strange situations going on geopolitically, right? From the China side, we are talking about Turkey hitting 73% inflation year over year, if I'm not mistaken, as well. So there is definitely a lot of chaos. There is definitely a lot of chaos, and we've barely escaped this COVID pandemic, and we have entered already into something I would argue even larger or potentially larger consequences. So, this and more we're going to actually discuss today, guys. If you already, make sure we are going to give it a go, right? Please let me know if you can see my screen, and kicking it off with some quick check of the news, right? Need to know for the market risk. Well, we have some senior US officials saying China has reached out to Pentagon about a meeting between US and China defense and Chinese defense ministers in Singapore later this month. Okay, potentially interesting step as we go into June. U.S. non-farm payrolls, forecasted 18,000 for 318,000. S&P's 500 strengthened because of that, because U.S. non-farm payrolls actually tell you about the employment, right? That how much of the employment improvement there has been, definitely, right? So larger than the forecast is actually something positive, which typically makes the market react quite better, and better, more than not overall. Then we are looking at Russian Foreign Ministry spokeswoman saying Germany is remilitarizing, uh, and basically which will provoke an increase in risks. Okay, German economy minister spokesman, a support package for energy intensive businesses will be announced, which will be worth 5 billion euros. US lobbies the UK to rethink the Chinese chip factory deal, Wall Street Journal. We're looking overall at some, I'd say, a little bit of a more potential, relief coming up to the markets. Recently, we're looking at the Dow Jones Industrials, basically, consolidating after the strong recent push of the 30,000 lows, basically almost, right? Right now consolidating over the short-term average, trying to reclaim the previous resistance area and make it turn it into a proper support. I hope you guys see that well, because we are bouncing off $31,000 points areas for the S&P for the Dow Jones Industrial. Excuse that. All those S&P 500 is going to be thoroughly similar, and then followed by a local kind of like a consolidation between two averages, right? It's being clamped from the upside and from the downside, supported by the short-term average, which actually has increased a little bit, and versus the 50-day average, which continues to deteriorate on average into the local support at around 33,500. Okay, so this is definitely going to play a significant role. If we are to look at what's been going on at the S&P 500 and the larger, the larger basically picture on the Nasdaq Composite Index, then we are looking naturally at, well, at a quite a sequence, which is unquestionable downwards trend still, right? So the weekly long-term picture actually shows a lot of deterioration, a lot of weakness, which has been going on for, well, basically over half a year already, right? We are talking about the peaks in the markets. If you remember with the Evergrande news that came in early November, then later accelerated with a December's decision of the rate hikes pre-announced by the FOMC committees and by the Fed. So, well, all those things, definitely added a lot of downside pressure, which provided a strong retracement, if you will, right? So just the percentage change measured of the peak of November down to the lows, we're talking about 32% retracement peak to trough. This is quite a serious correction, right? This is not something that market just has seen too many times on some lower time frames, on some smaller basis. This is typically something that happens once in every couple of years. And when we account for all of the other macro factors, just like in an inverted yield curve situation where the short-term rates basically surpassed the longer-term rates in terms of the payoff. So in terms of the rates, this definitely tells you that there has been some weakening overly overseen and seen over the markets basically over the course of the past weeks and past months. So this overall economic slowdown while pumping energy prices. I think this typically marks the peak of the financial cycle, at least for some time, and typically leads to economic recession, right? Because we tend to know that there is like a financial cycle and there is business cycle, which is lagging 6 to 9 months on average, right, behind the stock market. And whenever there is this final phase of the stock market increase, this is very typical for the energy prices to go up, commodities to go crazy high. Okay, when that happens, there is an overall slowdown naturally, right? So I think this would be quite a likely scenario on the side of the S&P 500. We are still looking at the sequence of lower highs and low lows, right? There is like an attempt right now to also breach through the main X support, which supported S&P 500, the large caps, basically at around 42, 41, 4,200 points. Well, early this year, and once broken, it actually just let the markets drop toward like 3800s, right? So 4200 is actually right now the main resistance based on the price action and based on the polarity change, because a broken support turns into resistance, right? So it's actually on the other side of the opposite edge, right? It's at the opposite extreme. The polarity has flipped. So it's going to be very interesting to watch. It does seem to be quite an arbitrary, decisive zone and area for me and to me. You're looking at some MACD, convergence, moving average convergence and divergence, and basically kind of like accelerating to the upside in the short term, right? Histogram being on top on the positive side. So there's definitely something to this local bullish outbreak locally for the short-term 20-day average. And there is some chance we see the follow through, but truly not much is going to get confirmed sooner than we get a proper close of the week or of a day over the 50-day average, which basically marks the medium-term trend, right? So if you want to see the medium-term improvement rather than short-term corrections, rather than short-term improvements, you do want to look at the 50-day breakout, right? 50-day mean breakout. So if you actually see the 50-day mean breakout to the upside, let's say toward like 4,300 points, then this is definitely going to be so much more remarkable and significant to the implications, to the longer term implications, right? Potentially getting us to like 4,600s, if not higher, right? So we definitely are also in the midterm elections year, and the midterm election years typically return worse performance than non-midterm election years. Typically, pretty strong years are the ones that follow the midterm elections, right? So the midterm elections actually return flat or negative performance on average over the course of the past years, past decades, if you will. So this is quite a serious pattern, seasonality pattern that you're looking at, which is exactly why I would be very cautious in anticipating new highs like all of a sudden immediately. Rather, much more likely I would probably see some local kind of like a meter reversion play towards like some higher range regions and kind of like playing it back and forth. So speaking of the commodities as well, because I definitely touched the point there, we're looking at a somewhat of a retest of the high area, right? Mainly driven by the energy prices. This is also very apparent, I think, in here. If we go to the energy, ETF, this is basically printing new highs consequently over and over again, right? After local slowdown, March through May, you're looking at new highs and trend getting even more and more aggressive. You can tell also the trend is getting more aggressive by the distance, right? By the relative distance between the short-term and medium-term average. So this is definitely a very strong upwards trend, very strong upwards pressure, and this also adds, I would argue, a lot of consequences also in the overall bonds market, right? So the bonds futures, you're looking at the prices at around within some local sideways at around 140 points in here, while the yields are actually, just actually slightly bit elevated today. You're looking at potentially something of a, even if seen on the CTF, well, you're looking at you're looking basically at this form of a descending triangle, right? This descending triangle, which kind of like seems to be breaking upwards, right? It's also seen in the smoothed yields alone. So this wedge or descending triangle, regardless of the name, it just shows you this locally, local oriented sideways slowdown of the previous trend, which had lasted ever since actually the end of 2022. Look at this, how strong this trend has been, right? So local slowdown is something natural. However, you can also tell that there is this slowdown on average. It's not just temporary. You can tell this distance actually between the short-term and medium-term average is actually getting smaller and smaller, right? So the smaller it gets, well, the more likely you are going to get actually a proper reversal of those trends, right? And a longer term, medium term to longer term direction trajectory for the yields. However, right now you cannot ignore this relative strength, this super strong market on the bonds and on the yields, and super weak market on the bonds naturally, right? Hope it speaks for itself. And well, and you do have to account for some shorter term kind of like analysis for the potential breakout on the commodity market, right? This is a Bloomberg commodity index for the futures contracts, and they are basically trading near these highs, right? So we're looking at some sort of like a pattern of an ascending triangle, if you will, right, where the resistance is being tapped consequently, just like it would knock on the door, and the highs are equal while the lows are actually converging to the upside. So this provides this potential chances so that whenever the pattern breaks out, you could expect some sort of like a measured move out of that, and the measured move is going to be equal naturally, and in the classical principle of technical analysis, equal to the height between the main points of the pattern, right? Between the main anchors, between the low of 115 points, right, basis points, and the high of 160, 136, 135 points, if you will, right? So this gets us potentially 20 basis points for the futures, of potential increase whenever you get a proper breaker, right? So imagine you get a proper breaker for this upper boundary, and if you get it and there's like an actual follow through to the upside, then this gets you like to this entire base size measured off and added on top of the breakout itself, right? So it gets you 20 points approximately added on top of 135, 150, 155, 160 seems to be the region, right? And as long as you see this market actually continue to hold this main 50-day moving average, which converges overall with this direction of the of the trend line, right, then I would argue there is quite a strong chance for a follow through to the upside. So we should be aware of that. And if that happens, mainly probably driven by oil prices and by oil prices and energy, you want to guys look at it. Definitely, right? So please let me know so far if it's clear, if it's understandable. We do want to get it and take it even further. Let's just give a quick check, quick roundup check, on what's been going on Bitcoin compared to dollar, right? So Bitcoin, this is actually, sorry, Bitcoin USD pair with gold, right? With gold prices. So the gold prices have actually been pretty much elevated compared to Bitcoin, while the gold prices have actually seen some decent spike up, some decent V-shaped recovery, right? But after a period of weakness, you see this pretty much one wave up, strong wave up of recovery. Bitcoin is actually right now just clinging somewhere at the main support area, long-term support, right? Which is very apparent, I think, because it's lacking the strength, it's lacking this overall follow through so far, which is, I would argue, not necessarily the healthiest sign. However, we should also make sure that we are aware, of the context, and we're right there at the very bottom of the long-term pattern. So I would reconsider my chances if I were just to shorten the very long-term period of an overextended downside movement. I'm not implying it's bound to reverse like immediately all of a sudden just because I say so. But I think if you were shorting right now, if you wanted to short, just remember that you had already missed 10 weeks of shorting, right, in your favor. So you have to be aware of this as well. Now, I think that if we even account, for the correlation, 7-week correlation coefficient to S&P 500 to the large caps, you're looking at 0.52, which is quite a strong, sharp decline over what we had last week. This sharp decline on the correlation basically tells you that in the short term, the correlation between Bitcoin and equities has reversed, right? Which actually makes sense because the stocks have been going up for the almost entire week, like you saw, the S&P 500, Nasdaq Composite Index, or even Dow Jones Industrials. You're looking at a lot of consolidation after a strong push up, right? Well, Bitcoin actually has been targeting still, those lower areas of the region of the long-term support, right? Which is of course at around $30,000 approximately. So this correlation, coefficient actually turning down, with a strong and sharp downturn. I think this eventually, in the longer term perspective, it's more bullish than bearish for Bitcoin itself, rather because whenever there is like some big uncertainty and crash ahead for the stock market, Bitcoin is supposed to actually absorb some sort of like a capital coming out of that, especially when dollar is down. So just giving it, a local check towards like medium time frame, there is a lot of indecision as well. Although, despite you had this kind of like a bullish mark, which is what made me actually trigger, which was my trigger for an entry for Bitcoin over 6 figures. You're looking at a potential invalidation of this mark and the bears regaining the upper hand with an invalidation at all the $32,000 upper $32,000, right? So it is all provided that you see actually the day close, any day close below the main support area, which is 29,600, right? So 29,600. If you see a close of a day or a midday or a week below that threshold, you're looking actually at a more fatter sequence of this chop, of this directionless chop, which is actually not really promoting any direction whatsoever. You can tell that the market is moving, in this more or less sideways environment, basically not promoting any direction whatsoever, which kind of like gets you back to the mean reverting strategies, right? And for the overall strategy that is actually displayed right now with those current time frame trailer breakout thresholds, this trend breakouts, typically yield low win rate. Trend strategies, trend systems actually get you low win rate somewhere between 30 and 40%. But for the cost, or actually for the reward of having, this fat tail in the market, this abnormal, exceptional length and duration of subsequent price action moves, which is the trend itself, right? So abnormal length of consecutive candle closes, just like you've seen this downwards trend, right, which has lasted basically since, 9 to 10 weeks already, right? So you want to kind of like get chopped a little bit with small losses in the sideways in order to let this to let yourself profit from the market when it finally develops into something larger, right? That is the way you don't actually miss it. And on the bottom there is like an ATR smoothed indicator, which basically tells you over the volatility, right? This is one of the technical ways to measure the volatility in the market. And the volatility in the market basically tells you it's slightly actually matching the medium term levels, while on the short term, of course, if you compare that, there is a lot of sideways kind of like tendencies, right? This doesn't really promote any direction whatsoever in terms of like volatility, mainly because you're moving in sideways, right? So this is something natural. And notice that usually the peak on the volatility, you know, aligns with the peak in the price action. So, and this is very natural because the market reversals occur in the largest volatility. So when there is the largest volatility, there's also a chance for largest reversal. Uh, you also have to account for it, and the volatility is a measure of risk, right? So if you want to get to know, let's say, the average, the average true range, basically giving you $1,000, from the open, then you're basically checking the open, and you know that there is 500 upwards and 500 downwards, kind of like in the simplest manner you can imagine, even not really getting too much into the details. So this gives you an idea of the overall volatility, right? So you do want to see some abnormal volatility aligned with the trend breakout in order to make sure it's actually good, right? So as long as you see the sideways, the volatility is likely going to stay sideways too. And if you finally get to see some proper breakout to the upside, which is not fake, you're going to likely see also an outburst in the volatility on the bottom panel, right? So it's very apparent also on the smaller time frames, guys, to understand. Well, if we have to ensure that there's a more mean reverting kind of like idea over the short-term patterns, because short-term price action, it mainly involves much more noise than trend itself. Okay, so you have to observe some more like momentum indicators, giving you a rough idea, just like these momentum bands. By the way, guys, I do know that there is definitely been going on a lot, for the week. But just want to kindly remind you guys that if you need help, with with your trades, with your ideas, with your education, we do have this free trial option, right? Where you go to thebirbness.com, and go and press on the button on the upper right corner. It basically gets you 7 days free trial, okay, for the exclusive Nest Club, for our exclusive premium trading community, which exists since 2017. And you're looking at tons of educational trading materials for any markets, crypto, stocks, forex, commodities, indices, whatever. 24/7 support from myself and from my beautiful team, automated signal scanners, daily webinars from professionals. This is all kind of like getting into your mailbox free of any charge with an immediate setup. Just put your email and name, and we're going to do the rest. No charges, no strings attached, no anything but pure value, guys. 7 days free, right? If you want to, just go to thebirbness.com/free trial, and it's basically yours. So back to the point of Bitcoin, I think it's very important to understand, everybody, that if you're looking at this momentum bands, kind of like, which gives you a rough idea, first of all, of where the momentum is heading, where the money is moving, in which direction. You're also looking at this volatility kind of like range, right? So you can tell this average volatility has actually, failed to follow through after this recent breakout to the upside. You can tell that there has been overall like a declining tendency on the momentum trajectory, or direction that the money moves toward. There's been outburst, however, this outburst was not really seeing too much of a follow through, right? If we had wanted to see more follow through, we should have basically looked and observed this continuation. But right now we are instead looking at this kind of like, clustering within one and the same price range, right? And this price range is defined by the momentum bands here, and which basically tell you that you have more kind of like a probable range inside this, right? Excluding these overall extreme bands, which tell you about extreme, well, oversold or overbought conditions, right? Um, and here we are talking about the range that is most likely that we see Bitcoin trade within is $29,000, right? All the way up to 31,500, right? So this is basically the zone that we can see Bitcoin play kind of like, back and forth with no conclusion, with no direction whatsoever to the trend. However, if you see a proper breakout, if you finally see a proper breakout, to the upside through the upper band, right, which is basically telling you that there is abnormal volatility and decisive move, the money is moving outside regular kind of like range. This basically leans toward and tilts the chances towards an upwards breakout, right? Same goes for the downside. If you see a strong breakout to the downside for the low band, right, this tells you about abnormal volatility to the downside, which basically may mean some more of Bitcoin kind of like deterioration in the near term, right? Potentially, we are talking about the range, of course, defined by this overall candle shadow, given at around 25,500, $25,000, depending on the exchange. So this is where I would be looking at, within the area between $25,000 and $29,000, 2,800s, well, where potentially, we may see failure to continue or failure to hold the $28,000 potentially may get you, in the lower, closer to the midpoint of 20,000s. However, that requires a proper breakout. As long as we don't see this breakout, you're looking at sideways. I think it does make sense, guys, right? It doesn't promote any direction. There's been, of course, some, because I follow the trend breakouts, I am enforced to suffer lots of small losses, right? So if the daily closes below 29 600s, I'm going to take this loss and actually, move on and wait for the larger trend to develop, because apparently the time is not here just yet, right? And if it does make sense, the mean reverting strategies will continue to prevail. So momentum trading, short-term kind of like setup would be my focus. And to answer the main question, basically, will Bitcoin situation get worse? Well, you're talking about the situation only if you see a proper breakout below the low band, okay? Below the low band, if it gets, right, this actually probably gets you a little bit of longer sequence to the downside, just moving somewhere in the $28,000. So it may get worse, but there is a condition to it, right? It needs a proper close below $28,000, and if it does get so, short-term deterioration might be apparent. However, it's not really permanent. It's not really given. It's not taken for granted. Shouldn't be taken for granted, because we are moving in sideways, right? This recent lack of follow through and failure actually tells you that, again, the market is not ready to push upwards just yet with enough strength. There's no follow through. Instead, we get rejection and, Bitcoin price action getting back inside the old range. So as long as it does so, as long as it does continue in the same range between 28,000 and $32,000, I would argue that this promotes mean reverting and short-term setups, which is definitely not of my interest. So all those things concerned, guys, I definitely want to remind you that if you're not subscribed to our channel, make sure you hit the subscribe button and smash the likes and hit the notification bells as well, so that you stay notified whenever we get to see the new video uploads on our YouTube. Hope you enjoyed that, guys. If you did, make sure you again hit the subscribe, smash the likes, leave some kind comments and questions so that I and my team can actually get back to you later off the show. Hope you enjoyed that, guys. God bless you all. Hope you have a beautiful rest of the day, and I see you around. Bye-bye.